coming to you for our weekly market update. It's been a fantastic week here at Parrot Realty. Put four plus homes under contract last week. We have some beautiful two new listings in Cascada that we're having open houses this weekend, Saturday and Sunday from 12 to 3. Amazing two different style homes. So market's going great. I mean, obviously we're under 100 listings right now. Our team's growing. We're stepping up our game in technology. So you're seeing more videos of not only me, but our amazing team and agents extraordinaires. So I really am proud of what we are accomplishing for this 2023. And we're not even yet through our first quarter. So we're almost through the first quarter. You believe it's almost been the first quarter of 2023? Surprise. So obviously what's going on in the market right now, a lot of questions we're getting from our clients and people in the business is, this whole Silicon Valley bank going under. Is it, people started thinking, is it 2008 again? Or banks going to need to be bailed out? And, how is that going to affect the real estate market? How is that going to affect the economy? So let's dive into that a little bit differently. The Silicon Valley Bank wasn't an ordinary bank like Bank of America, say, or the people that had their deposits in it were more tech startups that were dealing with much larger deposits. So, what does that really mean? The FDIC, which stands for Federal Deposit Insurance Incorporation. This is backed by the government that they protect up to $250,000 of your deposits. So you have $100,000 in your bank account, you have 20, if you have 250, it is protected by the government. So God forbid those banks could be any of the banks that you are and have your deposits in that are FDIC insured, which when you open an account, make sure that all banks are FDIC backed. So you are protected up to 250,000. So anything above that, if God forbid the bank would go under or go bankrupt or solvent, your money above the 250 threshold could be in jeopardy of being lost. So all of these people freaked out in the Silicon Valley Bank because they obviously had a lot more money in the account because it was a different type of bank. So understand, according to Dave Ramsey, who we all watch and very, very insightful. I recommend that you all follow him, and he has millions of followers. Most banks cover 70 to 80% of their deposits. So the FDIC will cover up to that $250,000 threshold. So most people are within that threshold. So the Silicon Valley Bank had 90% of its clients with deposits over $250,000. So 70 to 80 in a normal bank have 250 or less. Silicon Valley, they had over, 90 plus percent of them had way over that. So they obviously were a very risk oriented, big, huge, corporations and hedge fund groups that were investing a lot of money in tech stocks that obviously made bad investments. So the reason for the closure was due to the purchasing of these bonds at lower rates and the rates for bonds increasing, lowering the value of that bond. So this then caused the hedge fund investors to pull their money out, which had a domino effect on other clients, leading to the closure of the banks. So the government did come in. They didn't bail out the bank, but they bailed out the deposit. So if you had your money in Silicon Valley Bank, they were honoring it. So even if it was above that threshold, they were honoring that money because they did not want these banks, these people to lose this money and create, and that's up for debate. Some people think they should have let them go. They should have went under and the government should have gotten involved. That's a whole different debate. But understand, how did that affect the market? Well, it shocked a lot of banks, and it even has caused rates to go down. So rates have gone down almost over a half a point just in a few days to week time since the last video we've done. So the idea is, if you are having your money in your account, I would suggest that if grace is great. It's if you have lots of money and it's above the 250 threshold, if you do have that, I would advise you to switch and take that money out and put it in another account that is FDIC insured so that you won't have this problem. If God forbid any of these banks go under, at least the government can back you up to that $250,000 threshold. So get with your financial advisor, get with your accountant, and make sure to make the proper change. Maybe you could put it in some sort of money market If you need any financial advice, I could recommend you to my personal financial advisor, who's amazing. And he immediately called me a couple days ago and said, "We need to move some money." And I was very, very nervous at first, but he calmed me down, walked me off the ledge there. And, I truly understand. And that's why I'm bringing you this information, because whatever I bring you is my pulse on the market, but it's also affecting us in our daily lives, our personal lives. All of this money you have accumulated in your career, you don't want it to go away quickly. And that's why I think people were very fearful of this Silicon Valley Bank. The Fed could respond by not raising rates. We're projected to be raising rates, and that could happen where the banks might show that rates will go down because of it. And it's already shown that rates have come down off of the 7+% that it went up to last week, and now we're at 6.5 and change. So just in the past week in Parkland Real Estate, we have 98 homes for sale. 42 homes have been reduced in price. That's about 43%. And we have just a little under a 90-day average. So understand, I've been going on a lot of appointments, and I've been telling clients, by pricing your house high and thinking I can come down in price, you are leaving so much more money on the table by trying to test this settling market. So we are not progressing at any levels like we did from 2020 to 2022 in values. We're not seeing a 20-30% increase. If anything, we're seeing dips and, kind of merges and highs and lows, peaks and valleys right now as interest rates fluctuate up, all the way in the fives to now the sevens and back to the six and a halves. So it is volatile right now, but pricing your house right in the right market, which, today, if that's the right time for you, you are leaving, on average in Parkland right now, about $100,000+ on the table when you overprice a house. Crazy to sound, by pricing too high and saying, I could come down in price with offers. It's actually, time is not on your side right now. So these 98 homes have been sitting on the market on average for almost 90 days. Where if you price a house correctly, not underprice it or overprice it, which we're advising our clients, they're actually getting ahead of this market and closing and making tens, if not hundreds of thousands of dollars more. Because some of our listings have closed, and some of our competing homes that were on the market 3 months ago against us are still on the market, probably going to expire on the market. And our clients have closed, move out, got their proceeds, and they're on to their next property. And they're using that built-in extra equity they got. Because if the market settles, it's going to follow. The houses that are still on the market, they've been reduced already, almost 50% of them. They most likely will be reduced again to get offers on the place, and probably within the negotiations go down in price. So we're seeing price reductions within the offers as well. So understand, in the past 7 days, we've had 21 new listings come on the market. So homes have come on the market in the last week. 10 price reductions. So that's down. 12 homes went under contract. I think we had about 4 or 5 of them. So almost half of our homes that we put on the market went under contract. So kudos to our amazing team. 13 homes sold, and a 4-month supply of inventory. So that peaked up a little bit. Last week was, right around 3 months. And our median sales price is right around $1,125,000. So mortgage rates, as I said earlier, 6.4% for a 30-year rate, 30-year jumbo rate, which is about what, Parkland buyer would be doing right now. For a purchase, 6.15%. So it's in the low sixes again. And maybe if you buy down the rate, you could pay a point or so. You could get it under six right now. So speak to your lender. We would love to refer you to any of our amazing lenders that we work with. The 15-year rate is under 6%. It's at 5.98%. So if you want to take advantage and cut your payments, that would be advantageous. And our 10-year Treasury is now back to 3.56. So when that 10-year Treasury, if you ever watched, Squawk Box or, any of the tickers, if the Treasury goes down, interest rates go down. So, and obviously when the Fed raises rates, it takes time for that to go up. So we're going to see what, Powell's going to do. If we're going to raise rates, we're going to keep them. I don't know what's going to happen, but right now, if you're looking to purchase a property, I'd try to lock that rate in right now. If you're looking this weekend of one of our amazing properties or out there in the field, I would try to lock your rate as soon as you get a contract on a property, because the rates could go back to 7%. Or kind of maybe go up a little bit. So we just don't know what the Fed's going to respond to seeing a bank bailout for the deposits. Now, the bank didn't get bailed out, the deposits got bailed out, the people got bailed out. So, is it right that these investors that made these crazy investments with way more than the 250 FDIC back money? That's a whole nother discussion. But right now, it's protected. Some other banks went under; they were protected. So not the banks, but the deposits were protected. So nobody lost any major money. So these are factors that we need to have a close eye on as we get into the first quarter is almost to a conclusion. But I go back to say, if you do have more than $250,000 in any one particular account, I would speak to your advisor, your banker, and move that money expeditiously to another account at that bank or another one that's FDIC, and keep your threshold under 250, so you are protected by the government. And that is the best advice that I received from my financial advisor, and I am listening to him. So I advise you to listen to yours immediately. If you don't have a financial advisor, you certainly should have one, especially if you have over $250,000 in your account. So this is good information. I'm really happy to report this. So if you have any questions in regarding to this information, I'll give you my best opinion, direct you in the right way to any sort of accountants or financial advisors for yourself or banks, and certainly in real estate. It's a great time. We're going to get in that summer season. I see a lot of homes expiring on the market. They're not selling with their first agents. You got 90 homes that have been, 98 homes that have been sitting on the market for almost 3 months. So those homes might come off the market soon. We would love to earn your business and trust. For the last 2 years, we haven't seen homes come off the market because the market has been ascending. So if a home was priced higher than it should have been, it took a little extra time to get to that number. And a lot of agents looked good where they didn't look good because it took so much time to get up to that number, and the home would then go under contract. Now the opposite's happening, where agents are overpricing like they did in 2020 to 22, and now they're feeling that their homes listings are sitting on the market way too long, and their homes are going to expire. And if that's somebody that then you should advise them to give us a call, because we're selling our homes in weeks still with multiple offers, and we're still selling them close to asking or over because of what we offer that is unique in Parkland and the rest of South Florida. So when you're thinking of real estate or anything in regards to financials, we can help you. We're here to earn your business and trust today, tomorrow, in the future. We are here. We're not going anywhere. And we are the number one selling team in Parkland for one reason alone, because we care about our clients. It's not a sale, it's not a commission, it's a relationship. And remember that when you're looking to sell your house, look at it like it's your largest financial asset. Do not leave it in the hands of a part timer or a best friend's, family member to sell it, because you could be leaving tens, if not hundreds of $1,000s on the table, and you are changed market where you can't be doing that like we could in 2020 to even to 2022. So hope this was a lot of advice. And we went a little longer today because of this really big thing happening with the Silicon Valley Bank closing. So please share our posts. If you are curious to know what your home is worth, please, we have a little scan that you can do right here on the top of the page, or you can visit my Parkland Home Value to fill out the form. I personally come out to look at your house, give you the advice to get it ready for sale, and give you our marketing plan and what I think it would take to sell your house personally. And then we have our amazing team of experts here in this location that would be able to also assist you. So we're going to have a busy weekend. Lots of people coming already, scheduled to come to our open houses. Please come. All the information will be on our Parrot Realty Facebook page, as well as my personal page here on Facebook. Thank you so much, and have a great rest of your weekend.